Hey everybody, welcome to Trading Capital's exclusive analysis. Today is currently June 15th, and as we're going to discuss in this video today, there's lots to discuss about natural gas, the energy markets as a whole, and a couple interesting plays that I have on my radar. Now, looking at the natural gas chart here, we had a phenomenal day for the bulls. Natural gas actually had a whopping 8.74% move to the upside. Now, was there news? There absolutely was news off of this move. Not only was there news, there was also a huge inventory day for natural gas. Consensus for nat gas builds were roughly 96 billion for a build, but the actual amount only came in at around 84 billion. So it was a 12 billion miss on the build side of for natural gas, which is why the price action shot up. And then you also had some important production facilities halted. So couple fundamental news pieces that catapulted the price action to the upside. I prepped my members for this, saying that natural gas was forming this beautiful inverse head and shoulders here on the intraday chart. So you can actually see it. You had this left shoulder over here, you had this head, you had this nice right shoulder. Your neckline was basically from this high pivot shoulder, and look at that technical boom breakout to the upside. Now, believe it or not, this pattern has actually completed to the upside, I believe. Let me just erase this. So this pattern, I do believe, has completed to the, there's still a little bit more room to the upside based off of this small inverse head and shoulders. But really, when I look at this, although there should be some intraday consolidation from this level, nat gas has a tendency, when it catches momentum in either direction, it has a tendency to get going in a parabolic fashion, just like it did over here, just like it did over here. And let me remind you that we have been putting in a beautiful weekly and monthly basing formation off of this area, which tells me that natural gas is likely poised, and I think it's going to be very, very quick to challenge this $3 mark. If we can get some more positive data on the build side for natural gas in the next week or two, I think we'll be at this $3 level in no time. And what's interesting about that is you did have some participation in the natural gas stocks today. You had AR, which has been absolutely beaten down to a pulp, underperforming the market. It caught a nice over 5.27% move with volume. You look at EQT, that's had a nicer move to the upside, but it didn't hold most of its gains. It actually reversed on high volume, putting in this little mini daily topping tail. It's not your highest candle in the chart, but it's certainly highest in this overall pattern. You can see that it actually completed its inverse head and shoulders EQT. So maybe we're going to see AR, which is another natural gas play, catch up to the upside, considering that this has really lagged the overall sector as a whole. But I do think that natural gas is poised to continue higher. I mean, if you look at Boyle's just been absolutely bludgeoned. Obviously, this has a lot of decay in it, built into it, but it had a whopping day as well on heavy volume. So clearly people are chasing this. And here's the thing. We challenged the 50 moving average here. We didn't tag it. We got rejected pretty hard. We challenged it over here on what looked to be a solid breakout attempt. That failed, made new lows on the Boyle chart. Now we're challenging it again. Odds are we break through this level, we could see a big squeeze in the overall natural gas price action, which is why I'm still long my UNG, and we are nicely now basically in the money on this trade. So certainly going to be interesting to see how it shapes up. If we look at oil, oil had a positive session today, but what looks to be, to me, oil's putting in bearish consolidation. You're under the 200, you're under the 50. Notice how you've challenged the 50 moving average quite a few times in this consolidation range, and this is shaping up to be a bear flag. If this bear flag breaks, I mean, you're looking at a move down to 57 bucks in oil. The only reason oil is holding here is because you have the weekly 200 MA as support. But the weekly 200 MA has been tagged once, big bounce off of that OPEC cut, been tagged twice, another big bounce, been tagged a third time. And notice how the bounces are getting smaller and smaller and smaller at each time you hit that, which means that the buyers defending this level are slightly running out of steam, and it's going to have to take a massive fundamental change in the price action of oil or some geopolitical news for me to really send oil up to the high side. If you can clear this consolidation highs, oil has a chance to basically move to about 82.30, 82.50 on the overall charts. I think it's interesting to discuss gold as well. Gold had a pretty positive reversal today off of weak economic data, which sent the dollar and yields lower briefly, although the dollar did sell off all day long. But gold had a nice reversal off the lows. However, when you look at the daily chart, this is potentially putting in yet again another bearish consolidation pattern on the daily. And the big level I'm looking at is this simple upsloping trend line, connecting your pivot low, another pivot point over here, which you've broken. Now, you haven't confirmed, but you have broken that critical technical support level. And if you get more follow through and confirm below this 1924 pivot, gold could actually have a move down to about 1815 on the chart. Basically retesting these pivot lows and kind of this consolidation breakout zone to the upside. So with gold showing weakness potentially in the daily chart pattern and losing its momentum and steam, one has to wonder, are rates going to push up a little bit more? Is the dollar going to push up? What's lurking? What's going to send gold lower if this price action does break down further on the daily chart? Now, looking at the weekly chart, gold right now is still okay. Gold is still consolidating inside of this breakout bar. On the weekly chart, when gold turns bearish is if it loses this breakout bar. Gold turns more bullish if you get a weekly close back above this 1988 level. So this is kind of your resistance and support level. Your resistance is this high green bar at 1990, and your support is this low green bar at around 1865. That's going to be the longer term vision of gold. But right now it is looking like it wants to head a little bit lower on the daily chart, and we'll just have to reassess from there. So overall, my expectations is for gold to go a little bit lower in the coming sessions, for natural gas to continue to surge to the upside. And overall, if we look at this market, especially tech stocks, I mean, try to go back in time and see the last time that the NASDAQ rallied 8 consecutive weeks in a row, totaling roughly 20% of consecutive gains after you've already had a phenomenal move off of the lows starting of the year. So go back in your charts and try to find 8 weeks consecutive in the NASDAQ with interest rates up around over the 4%, 5% level. I bet you won't be able to find that. So on that note, I think that the NASDAQ and specifically mega cap stocks are going to see some weakness in the near term. You look at Microsoft, it just hit a beautiful, it made a new nominal all-time high on the daily chart today, and roughly had 38 million shares above average volume. A massive whopping 3% gain for a multi-trillion-dollar name is truly impressive, and it hit that double top like a T, and I do think that this area will get defended by the bears at this point in time. So thank you all for tuning in. Please give this video a big like down below and subscribe below. Take care, everybody. I'll see you on the charts a bit later.